Hi, it's Leaf West again. Now I'm going to go over my intraday trading. I'm going to start with Goldman because I think there's two different ways I traded that intraday that I want to highlight. And if I have time, I'll go to either the spiders or the apple trades that I did today as well. So here's a 3-minute chart on Goldman, and as most of the market did, it gapped higher and basically sold off from the get-go. Goldman sold and actually made new lows, which most of the financial stocks did. Not the whole market didn't do that, but again, the financials have been pretty weak, and so but it's they've been so oversold that I have been looking at the sector and have been playing around. And so the one thing I want to point out to people is that you know I believe in looking at the waves of price moves, and one of the big things that jumped out to me today was just the look of the push down by Goldman. And if I look at this, and if I can draw trends, I can see there's my first leg down, my second leg up, and a bigger third wave down, which is always the biggest wave. And if actually you can count 5 waves in that third wave push down, and then the fourth wave up, and then the fifth push down to finish the move down, and then you get either a new trend going the other way, or you get a corrective bounce. And so let me show you the first trade I did on Goldman for a small winner. Let me just pull that up on a smaller time chart. Okay, so here's a 1-minute chart, and here's what I was looking at this morning. So we sold off, made a weak bounce attempt, and then rolled over and broke the early low, broke the opening range low, and went lower. And if I look at my momentum indicator on the bottom here, we can see that the push to break the opening range actually made a big new low on the momentum indicator. So that tells me that after a bounce we should go lower. And so sure enough, we went bounced up to the bottom of the opening range and then pushed lower. And my indicator was giving me positive divergence, and I like to play, for those of you who have read my stuff for a long time, sort of a 3 push pattern. And I could sort of see 3 higher lows here. So I was very interested in this doji candle that was being put in here. And so I jumped on Goldman relatively quick here, and I bought it at what price did I buy it at? I think I bought it at 98.98. Basically, I got it in this second candle here, right after this doji close. I got in on this next candle, and my target, again, because we have not proven that we're going to stop going lower, but I thought that we were going to get a bounce, and this could be the bottom of the day, and you could move higher because it also was basically right at the low of the day from yesterday. So it potentially is a spot where the market could just move higher, and you could have caught a perfect stock in a perfect position. But my goal was to hang on one sec. Sorry about that. So I stated, I think I tweeted that my for in this situation, I will take aggressive stops, or not stops, but targets. I want to take profits, and I can always re-enter if the stock proves that it wants to go higher and there's a big, more meaningful move. So when I look at this chart and I was looking at it, you got to remember you don't see anything past sort of this first candle after the doji where I got involved. My target was usually if a stock is going to corrective bounce higher and then roll over and make a new low, it will go up to the 61.8% level, or roughly 50%, but usually 61.8. That's what I sort of found from experience. So when I looked at this, the 50 EMA was just below this level, and my target was to get out just in front of the 50 EMA and the 61.8, because it doesn't always touch it. But so I give myself usually 5 cents or whatever in front of those numbers. So I think my goal was to get out at 99.85 roughly, and as it turned out, I took my profits at 99.80, in front of these moving average and that level, and then I raised my stop right away to the 38.2 level was at 55 cents, and I moved it to 60 cents. Again, if if the market's going to go higher, it could just keep going higher, and I'm happy there. But in this being one of the first trades I'm doing on Goldman for the day, I want to make sure that I lock in a potential winner. And I didn't have a huge share situation as well, so I didn't want to get a small winner on the first half and then scratch out for zero on the second half. So I raised my stop aggressively to 60 cents, and I was taken out, and I think I got filled at 58 cents or 58 and change. So that was the first trade for Goldman. Let me get the second trade up. Okay, again, this is the 1 minute chart, but I showed you the 3 minute chart and the 5 waves down that I counted, and I counted it in the SPY as well, and I think I tweeted that fact that the SPY had made 5 waves lower, and that potentially could be the bottom for the day. And so I got involved in Goldman after it made this bounce and pull back, and I bought it at, what did I buy it at? Hang on, we'll take a look exactly what I bought it at. So I bought it at 98.50, and I bought it, I think, right on either this candle or that candle. I think it was this candle here. And that was, if we look at it, if I do a retracement, right, that was right at the 61.8% level. So that's what I was looking forward to take a chance on entering Goldman again. All right, so here's the grid that I was looking at, and actually, maybe it's better if I show you what I actually, which I actually was using earlier today, and what I tweeted the actual chart. Hang on. Okay, sorry for all the stammering that I'm doing this and looking for things. This is easier to show you because this is actually the chart I had in front of me at the time, and I took a snapshot of and marked up a little bit. So I got involved here on this candle, took a snapshot, and because I had a contraction pattern starting, this green indicator, which monitors Bollinger Bands and Keltner channels, and does a mathematical formulation based on that, and tells you when price is contracting. And we all know that price expands after it contracts. So that's the play. I look for these green indicators to get involved. So because I had more confidence in a bigger move happening because of the contraction pattern, I wasn't going to be aggressive in taking my profits. So my first target was the 78.6 level, because again, if this is going to fail, we'll go up to the 78.6 level at most and then roll over. So I want to take a profit there so that at least have some cushion if the market does roll over and comes back down. And if I'm not sure where my stop was. I think my stop was at 97.95, which was about 20 cents below the low of the day. And if I got stopped out there, I still probably would have, I would have made 80 cents, and yeah, I would have made a small, meaningless profit, but at least I wouldn't have lost any money on the trade. So that was my first target, and my second target was an interesting one. Based on the pattern, it came in at $100.52, and actually that was the bottom of the opening range as well at 152. So actually my target that I think I tweeted about was at 150, which is, again, I like usually to take profits just in front of these targets, just in case the machines take over and stop price from exactly hitting those targets. Sorry, I got the right grid up now. I had the wrong grid up before. So here's where I got long, and price grinded sort of sideways in a bull flag pattern off the low, made a higher low, made a nice little doji there, and I should have, if I was looking at the screen at the time, I would have jumped on that again and added to my position, but I didn't. But sure enough, price was in a contraction. You can see the green mark here, and then boom, it quickly jumps higher. I took half off at my first target at 99.30 right on the button, and then I actually, for whatever reason, I didn't hang around for my my second target, I decided to take profits at the in front of this VWAP, and I think I took at 99.60. I got out of the trade, and as it turned out, I didn't really miss much for the next little while, and then I got involved at the end of the day, and I'll just quickly show you that the reason I did that. So again, based on my longer term view of Goldman, from the day's high, sorry, from this push higher, the retracement was finding support right at sort of 99.50, which was the 50% pullback. And again, we made a higher low, took out two highs, and now we're just basically chopping sideways in a bull flag pattern, which is setting up perfectly. So unless Europe does something stupid, I really think that this Goldman stock is going to jump tomorrow morning first thing. So that's what I'm playing for. Anyways, have a good night, and we'll talk to you tomorrow. All right, bye.